guys?
Nope.
Okay, so chapter 1 really doesn't have much content. Chapter 1's just kind of talking to you about the difference between financial accounting and managerial accounting. So our focus is much different in managerial accounting than it was in financial accounting. Financial accounting is very rule-based. We have US GAAP that we're abiding by, right? Because we're providing external users with information to make decisions. So what information is relevant to investors and creditors and outsiders is very different from information that's relevant to insiders, which is what managerial accounting focuses on. So in this class, really our focus is on providing relevant information for certain decisions that managers are going to make. Managers have all of the information possible. They have so much data, but for every decision that you have, you're not going to use all of that data. If you used all of the data that you had available to you for every decision, you'd never make a decision because we have so much information there for us. So in managerial accounting, it's figuring out, okay, what information is relevant for the decision that we're currently making, and let's get rid of everything else and ignore all the rest of it, or we're not going to be able to focus and make that decision correctly. So in this class, we're really going to be focusing on what the decision is at hand. What are we deciding on at this given moment? And based on that decision, what information is not relevant? Let's get rid of it. And whatever's left over is the relevant information that we're making our decision on. So in this class, you're going to be crossing out information. You're going to be given these huge paragraphs of information and stuff that you don't need, just like you would have as a manager internally. So this first chapter is essentially your introduction to relevant information and decisions that managers are going to make, and new terminology that we're applying to concepts that we already know. So if you notice something, we kept saying costs in this chapter, not expenses, right? What you knew as expenses in financial accounting, yes, we still have expenses, but now we're going to figure out when are we actually expensing them based on the type of cost it is. So all of what you learned in financial accounting is still relevant, but we're just going to put some new terminology to it. And instead of focusing on the big picture and the consolidated company as a whole, we're going to be focusing on just pieces of the company and certain sets of information at different times. And with managerial accounting, we're not locked into rules except for external financial reporting stuff. Things that we have to report externally, we still have our rules. We still have GAAP. We still revert to GAAP. But for internal decisions, it's wild, wild west over here. Okay, we get to use the information that we choose to use for the decision that we're making. And sometimes the decision that we're making, we may go one direction and maybe we should have gone another direction, but we'll learn from it because we're going to evaluate it after the fact. It's more of an ad hoc type of a class than financial accounting is. We're future focused, which is more finance focused, than past focused, which is what we focused on in financial accounting. That's basically chapter 1 in a nutshell. Okay. And for chapter 1, yeah, you have some easier homework is what you're going to find. The homework's pretty simple because I have to address chapter 1 for my course learning outcomes. It's one of our course learning outcomes. It's really pretty simplistic, and it's not the bulk of what we need to know, and that's why I focus on chapter 2 in class. Chapter 2 is going to seem a little bit disconnected at times because there are a lot of pieces that you're going to be learning in this class. 3 chapters in this class are budgeting. So we're going to learn information that we're going to use for budgeting. We're going to have a chapter in this class where we're solely focused on manufacturing and job order costing for a manufacturing company. So we have some external reporting information and cost data that we need to know how to do. We're going to have some chapters where we're just given decisions that we need to make. Should we add or drop a segment? Should we start a new product line? Should we invest in a certain new piece of equipment or a new business? So all of these chapters where we're focusing on these different topics, we need different information for. So in chapter 2, really what our focus is on is kind of understanding this different set of data that we have and what we call it in managerial accounting. The hardest thing for students to do in this first chapter is to shift their mindset from financial accounting to managerial accounting. Everything that you learned in financial accounting is still there, it's still relevant, but we may be calling it something different in this chapter. And we may be looking at it a little bit differently than we did in the last class. An expense is still an expense, but what we're focusing on is what type of an expense, what type of a cost it is. Depending on what type of a cost it is how we're going to determine how to actually account for it. So before we dive into costs, we're going to first do a little kind of refresher introduction to the different types of businesses we're going to be looking at in this class, which are service providers, somewhat, merchandisers, and then manufacturers. So I'm going to start with manufacturers because we didn't learn anything about manufacturing in financial accounting. Manufacturers convert raw materials into finished products. So manufacturers are actually creating something, and they're taking these raw materials, which could be raw wood, right? It could be, or it could be component pieces of a computer. It could be the hard drive, the disk drive, the screen of a computer. Those are considered raw materials for that particular company because that particular company sells computers as their finished product. So manufacturers are taking those raw materials, those inputs, they're adding in some labor to that. They're adding in some other materials that are indirect materials of manufacturing, and they're creating this new product that they can sell to their end user. Sometimes they sell directly to consumers, but a lot of times they sell to another business. For manufacturers, their balance sheet looks a lot more complicated than what you're used to seeing in terms of inventory. For manufacturers, inventory is going to be considered what? Category-wise. What is inventory? Goods available to be sold, right?
It's an asset.
It's an asset. Inventory is always going to be considered an asset. And instead of having one inventory account, manufacturers have 3 inventory accounts. Because depending on where these goods are in the process of manufacturing, that's relevant information to their end users. Because their end users need to know, okay, are the majority of your goods raw materials? If your majority of your goods are raw materials, you don't have a good to sell yet. But if most of your goods are work in process or finished goods, well, if they're all sitting in finished goods, then do you have a sellable product? Do you have a product that's wanted in the marketplace? So it really is relevant to know what type of inventory and where we are in the inventory production process for a manufacturer. So the first inventory account that manufacturers have is raw materials inventory. So raw materials can be direct materials or indirect materials of manufacturing. These materials will be going into production and or used within the manufacturing facility. So it has to do with the manufacturing facility and the production of these goods that are going to be produced into finished goods. So materials used to manufacture goods. If I'm talking about that computer company or that computer manufacturer, their raw materials are computer screens, keyboards, hard drives, stuff like that. All of those other like screws that we're putting into it, anything that's within the factory facility that's considered a material, including janitorial materials, cleaning supplies in the factory, all of those are going to be considered raw materials. The thing with our inventory accounts in manufacturing accounting is we don't jump around the accounts. All materials that are used in the manufacturing process start in raw materials inventory. And as soon as we start production of those products, we move it, we requisition it and move it from raw materials inventory into work in process inventory. WIP. Work in process inventory are partially completed goods. This is where we're accumulating all of the costs of manufacturing. So when I requisition the materials, I'm moving the materials from raw materials inventory to work in process inventory. As I start working on and producing those goods and applying labor to it, I'm adding direct labor directly to the work in process inventory account. And any indirect materials or indirect labor that's used is also going to be included in that work in process inventory account. We're accumulating the costs of manufacturing in WIP, and we keep those goods in WIP until we've completed the goods. As soon as we have a sellable product, it moves from work in process to finished goods inventory. Upon completion. Until then, it stays in WIP. Finished goods inventory are completed goods that have not been sold. So we're working our way through 3 balance sheet accounts before we even get to what? Once we sell those goods, what does it become?
Income.
Well, part of it, we're selling the goods to earn revenue, right? But what does that inventory become once we sell it?
Cash.
Nope.
Cost of goods sold.
Cost of goods sold.
Oh my God, it's been so long.
I know.
Seriously. I feel like I forgot everything.
So we have
I
to
feel like I forgot everything.
That's why I told you don't memorize. Because I knew it was coming in this class. Okay, we have to move through inventory, 3 accounts before we get to cost of goods sold and expensing it in the income statement. We'll eventually get there because we need to match the goods that were sold with the revenue that we generated from the sale of those goods. But upon sale is the only point of time that triggers us to move it from finished goods inventory to cost of goods sold. Little bit more complicated than what we're used to. Few extra accounts. But what you need to know is and understand now is the flow. The flow of that information, and start kind of thinking, okay, these are inventory accounts, normal debit balance. Okay, if I'm moving it from one account to the other account, what's the journal entry? Because in chapter 3, we're adding journal entries to this. And
We not.
we are, because we're learning accounting for manufacturer in chapter 3. So if you start thinking about journal entries now, it'll help get you back in the flow of that.
I have a quick question. So is it, you said that it's not, it doesn't become a cost of goods sold until it's a finished
Sold.
good, but if you're selling a raw material,
No. So stop, Andrew, sorry. Until it's sold. It sits as an inventory account, finished goods inventory account, until it's sold. That's the triggering point.
but you could sell it if it's a work in progress or raw material?
You could sell it at the raw material. You could possibly sell it at the WIP, but it's not going to be what you're trying to sell it at. If you did
Okay,
sell
got
it
it.
at that point, it's likely that you're going out of business.
And then dump your
Honestly,
inventory or whatever.
selling your WIP, if you're selling your WIP, you're likely going out of business and you're trying to liquidate some things. Raw materials, if you're selling it, it could be that you're selling it to another company because they're desperate, but it's it's going to be very rare that you're selling at those levels.
So even like if you're selling wood when you first lumber it, it's going to technically be a raw material because they have to do the process to it. So even like a raw material like wood, it's still going to be a raw material and become a work in progress, and then it will actually go through the stages and become a finished goods.
Yeah, so if I'm making tables, I have to take that wood, put it into a table, right?
Yeah.
You really have to see what's their end product, what's the product that they sell, and that's their finished good. And
Okay.
it's different for every manufacturer. Okay. The other part that is different for manufacturers than what you're used to is we're going to be using the terms factory and plant. Factory or plant, whenever you hear those terms, is where we're producing the goods. This is where we're manufacturing the goods. This is important to remember because there will be a difference in classifying costs as either product or period costs, depending on if it relates to manufacturing or if it doesn't. So if it has to do with the factory, has to do with the plant, or the facility where they're manufacturing the goods, product cost.
And factory and plant are interchangeable words.
Yeah. And you'll see a lot.
And you said those are product costs?
Yes, whenever you see anything related to the factory, you know it's going to be a product cost.
Okay.
Okay. So you kind of have a little hybrid. Your merchandisers, you could be a retailer, which is what you're used to from financial accounting, or you could be a wholesaler. So their purpose of business is a little bit different than retailers. And wholesalers and retailers are different than manufacturers. Wholesalers are buying from who? So they're buying in bulk.
The factory.
Yep. They're buying in bulk directly from manufacturers. Wholesalers are going to do what with those goods? Because they need to make a profit.
Sell them.
Nope, they're going to
Sell them
mark
to
it up.
retailers.
They're going to
Mark up
add a little
100%.
up to it. They're going to mark up those products. and they're going to sell it to the retailers. Sometimes they sell it to the consumers, but usually it's directly to another business. So wholesalers are essentially the between party for two businesses. Wholesalers are considered merchandisers. And so we're going to get into what a retailer is first before we get into the inventory accounts.
Would it make more sense for a retailer to buy directly from the manufacturer if merchandisers mark up that product?
Absolutely. It
But
would
if you have
be.
the space for the inventory, though, like
Wholesalers have
yeah,
those
that's
facilities.
true.
They hold the goods, right? But retailers
Yeah.
have limitations. And also it's
That's
not
true,
always
'cause
available.
other times too, if
Yeah,
you go to the
'cause-
factory, they'll only sell you like a ridiculously like large quantity of it.
That's very true.
So that's where you have like the wholesalers where it's the go-between.
Let's go.
For retailers, we're selling directly to the consumer. Us, right? And they're reselling tangible products bought from wholesalers, typically. And sometimes from manufacturers. So they're purchasing it from suppliers and manufacturers, and they purchase those goods just to sell it to their customers, right? The consumer. They have retail establishments, they have retail stores. They're not in the manufacturing business. They're not creating the goods. They're merely purchasing those goods from another company, holding those goods temporarily because they don't want to hold them for too long, because the longer you're holding it, the more cost it is for you to sell it to their consumer, to their customers. Retailers and wholesalers, or merchandisers overall, have one asset account related to inventory. And what is that asset account called? From chapter 6.
Can you repeat the question?
Cost of goods sold.
No, that's not yet. Close, Alex. So what's the inventory account for merchandisers? Merchandise inventory.
Good job.
Really
like a trick
complicated name right
question.
there. Thank you, Matthew. Merchandise inventory.
Felt like a little bit of question.
It was really a tricky question right there. And what's the triggering point? Again, it remains as an asset until,
Sold.
yeah, upon sale. Upon sale, it becomes cost of goods sold again. So the income statements of manufacturers look very, very similar to merchandisers. Balance sheet for inventory, different. Income statement, not so much. For the costs that are associated with that merchandise inventory, it's everything that you learned in financial accounting. So the cost of the inventory, taxes, tariffs, freight in, getting the inventory to your facility, right? Any modifications that you had to it, all of those costs are included in the cost of the inventory, and it remains in inventory until you sell it. Upon sale, you expense those units that were sold as cost of goods sold. Why did I not include service up here? Why did I not take the time to write about it?
They don't have inventory?
They don't have inventory. Service providers merely sell a service. Accounting firms, marketing firms typically don't have just have a service they're providing. Law firms providing a service, and they don't have an inventory account. We also beat to death service providers in financial accounting. Our focus in this class really is on merchandisers and manufacturers and accounting for them. So you won't really see service providers too much in this class. Do Do you guys have any questions on this portion yet? Are you feeling a little bit confident about this?
Hanging on right now. I'm here.
Thank you, Alex.
I feel confident so far, but it might be a false confident, but I'm just gonna go with it.
No, go with it. It's fine.
I know.
Smile and nod, man. Smile and nod.
You're totally fine. Hey, Andrew. Shh. Okay. We're going to go through direct versus indirect costs next. And I'm going through this next because we need it before we get into product costs and period costs. So direct versus indirect costs are for cost classification purposes, and we really need it for profitability purposes. We need to figure out what costs are directly related to a cost object versus indirectly related to a cost object, especially when we're trying to decide whether or not we should maybe spin off that entity. Because if we're applying indirect costs to that entity, it may seem like that entity has a lot more costs associated with it than revenue that's coming in from that entity. So it's extremely important to really know the difference between a direct cost and an indirect cost to identify what a direct cost is versus an indirect cost, and to really know the difference between those before you get into profitability analysis. So when we're talking about direct or indirect costs, we're looking at it in relation to a cost object. Cost objects are anything that we want cost data for. That's pretty broad, right? What's generating costs, right? What's causing us to consume costs? So units produced could be a cost object. So the unit cost, the cost to produce a unit. Product lines. Could be a cost object. Individual customers, that's a big one, especially for service providers. As accounting firms, we were looking at our customers and figuring out some of those customers were not bringing in much revenue, but they cost us a hell of a lot. So we started getting rid of customers, clients because of it. You want profitable ones.
I wish we could do that at my job.
It's not always possible. What else could be something that you want cost data for?
Your materials, right? You want to know how much your materials cost?
It could be for a specific department. So the materials related to a specific department.
Did you do it for like your employees even?
And that's where it falls under your departments. So
Okay.
some departments are cost centers and they cause the company to incur costs and don't bring any revenue. Accounting departments are one of those, because you have to have an accounting department, but you don't always necessarily need a huge one because it costs a lot of money to have trained accountants on staff. So sometimes outsourcing it is cheaper, right? HR is another one. Costs a lot of money for trained HR employees, but it's not always useful to have it in-house. Sometimes it's better to go through a consultant and use them as needed. In chapter 3, we're going to focus on individual jobs as a cost object. And basically it's for every single contract that comes in from our customers, what are they requesting? What are the costs related to those specific jobs? Individual divisions are also considered a cost object. So these are big.
What is an individual division?
Each company kind of establishes segments and divisions a little bit differently, but some companies do it like the East Coast is a division, the West Coast is a division,
Okay.
stuff like that. So sometimes it's geographically located, sometimes it's based on like if I'm talking about like Gap Inc., they have Gap, Banana Republic, Old Navy, etc. Those are different divisions.
Oh, okay.
Yeah. So when we're looking at whether or not a cost is direct or indirect, we're looking at it in relation to specific cost objects. So a direct cost is a cost that can be easily
Traced.
and conveniently traced. To a cost object. I'm actually, you know what? I'm going to say it to a unit of product or another cost object. So these are major component pieces of a product line, such as if I'm building a car, the windshield, the number of doors, the number of tires on that car, the number of engines, etc. These are huge component pieces. Those are direct materials. And specific labor that you know how many hours these employees were working on that product, they were putting that good together, and you know what their rate is that they charge out, their cost. So you can easily and conveniently trace these costs back to a specific cost object, a specific unit, a specific division, a specific job. Indirect costs are everything else. Costs that cannot be easily and conveniently traced to a unit of product or another cost object. So it's either so ridiculously time intensive, labor intensive to do so, figuring out how much glue you put into your table that you produced, figuring out specific number of nails and screws, and then on a per unit basis what those costed you. It's just not worth your time to figure it out. Or it's a shared cost. It's a cost amongst different divisions, right? So the CFO's salary, the CEO's salary, those C-suites, that's a huge cost for the company. And so usually what companies do is they say, oh, everybody needs to share that cost. And a little bit to this division, this division, this division, this division. But it has nothing to do directly with that division. So those shared costs, those shared indirect costs, should not be assigned to, if you will, specific cost objects because it has nothing to do with that cost object. So if it's not easily and conveniently traced back to a specific cost object, then it's considered an indirect cost. You move on with it. And an example of that is manufacturing overhead. So if I talk about a car, an example of a manufacturing overhead cost would be the paint that's on that car, right? Because we're buying that paint in bulk and figuring out exactly to the penny how much paint you included on that car is ridiculous in our terms. We're okay with applying an estimate to it. Remember, from financial accounting, we use estimates and we're okay with estimates. They're not materially going to misstate the financial statements. For these cost objects, for direct costs, we're going to trace those direct costs directly to the cost object. So I can go back and I can see how many hours each employee worked on that specific product for that specific job. I can go back and see how many units or how much raw material was requisitioned from the raw materials inventory warehouse to production for that particular product. It's very exact. For indirect costs, we're going to actually allocate and apply an estimate to specific cost objects. We're okay with the estimate, but it's not exact. It's not as precise. It's not as accurate. And it's not directly traced back to specific cost objects. That's a huge difference between direct costs and indirect costs. The accounting treatment and the journal entries matter whether or not it's being classified as a direct cost or an indirect cost. In your information that's given to you, does it say, oh, this is a direct cost of manufacturing? No, you have to look at what's given, determine, okay, this is what they manufacture, this is what they do. Is it considered a direct or an indirect cost based on your understanding of this company? So it's extremely important for you to understand the difference, and you can't just understand the difference by going through the definitions. So you get to practice this. And I posted the chapter handout for you so that you can practice some problems. So chapter 2 is extremely practice heavy because I have to nail these concepts into your brain now so that you're ready for the rest of the class. So I'm going to pause it here. Okay. First one is catered foods served to patients. And our cost object is a particular patient. So a specific patient, and the cost is catered food that's served to patients. Is it a direct cost of a particular patient or an indirect cost? Do you know exactly what the cost of a meal is for each individual patient?
Yes.
Yes, and why?
Indirect.
Yeah.
So we're in the hospital, right? Why would I know as the hospital exactly how much each patient's meal costs me?
You bought the food.
So you know how to build them.
You bought the food. You want to know how to build them. You know how to build them. That's part of it. But each of my patients is there for a different reason, right? Some of my patients have hypertension, so they're not allowed to have very much salt in their food, right? So they have a specific menu that they can order from. Some of my patients have diabetes or have high blood sugar, so they have their own set of dietary guidelines. Some of my patients are vegan. Some of my patients are vegetarian, right? When I was in the hospital with my daughter, I got to order whatever I wanted off of that meal or off of the menu after giving birth. I was like, this is awesome. Like, let's order this, because you don't know when the next meal is coming and you need snacks for the hospital, right? So I was like, this is amazing. It's like a smorgasbord. They know exactly what each patient is ordering, and they know the cost of those meals. Hospitals have accounting down to a T. So it's absolutely a direct cost of a particular patient. For the wages of a pediatric nurse, so the wages of pediatric nurses, and my cost object is the pediatric department.
Direct cost.
Direct cost. If I don't have a pediatric department, do I incur the wages of a pediatric nurse? No.
No.
That's one way to look at it. Why are these nurses here? These nurses are here to service the pediatric patients. I know exactly how many hours they work. I know what their hourly rate is or what their monthly wage is, right? And I know what their fringe benefits are. So it is a direct cost of that specific department. Prescription drugs for a particular patient.
Direct cost.
Direct cost. I know what's ordered, and it's specifically for prescription drugs. It's extremely regulated for a lot of the drugs. And so they have to go in and type in a code. They have to scan the barcode of the individual patient. as they're giving it to them, and they're checking the dosage and keeping track of it. So they know exactly what each patient gets in terms of prescription drugs. The heating of the hospital, the heating cost for the hospital for the pediatric department.
Indirect cost.
Indirect cost.
Indirect cost. Why?
It's not topical.
And also, you don't know how hot or how cold that date's going to be, or how much, the heating's going to circulate, or when it's going to stop. So it's very unpredictable. So it can be more one day. It can be less other days.
It's also the entire hospital, and that's just the pediatric department.
Thank you, Andrew. That's what I was looking for. So think about your SDG&E bill, right?
Don't want to.
Yeah, right now you don't want to. But anyways, think about your SDG&E bill. Do you know exactly what room you incurred the most costs from? No. They don't get you. They're not that detailed. They're just saying, okay, this house had this amount of energy usage, this amount of gas usage, and this is the bill for the whole house. You can't directly trace it back to a specific room or even an individual user if there's multiple individuals living in that house. So it's an indirect cost of the pediatric department, because I don't know how much energy the pediatric department used in relation to the whole hospital. The whole hospital is incurring AC costs. The whole hospital is incurring these costs to operate for energy. So it's an indirect cost of each of those individual departments. For the salary of the head of pediatrics.
Correct.
Sorry, I'm just checking what's correct, Anthony. The salary of the head of pediatrics in relation to the pediatric department.
Direct.
It's a direct cost. If you don't have the pediatric department, you don't have a need for that head. You have him to run the pediatric department, so his salary relates directly to that department. The salary of the head of pediatrics in relation to a particular patient.
Indirect.
Indirect.
Indirect. That department, as long as it's running, he still has a job, right? As long as he shows up to work one day, regardless if there's 5 patients or 100 patients in his department, he's still getting a salary. He shows up for a minute, he receives a salary for the whole day. Six, some people don't know what this is, the hospital chaplain's salary. So the religious person.
It's indirect.
Right? In relation
Indirect.
to a particular patient, direct or indirect?
Yeah.
Indirect.
Indirect.
Why is it indirect?
The hospital accrues that guy's salary for every patient, even if you use them or not. So they're not going to charge him per person.
This is the only thing that a hospital really doesn't charge you for. They don't charge you if you see this chaplain. They don't charge you if you don't see the chaplain. The hospital covers that cost. So even if you use it, it doesn't matter. He's still receiving his salary. For 7, lab tests by an outside contractor in relation to a particular patient.
Direct.
Direct.
Why?
Because you're going to know what the test they're doing, so you're going to know the cost of that test.
Yes. So
Plus, they bill you directly.
True. But even if they don't bill you directly, they still know exactly what labs are ordered. And if you've ever looked at how they do labs, is they print out a certain number of stickers. They check your ID for those stickers. They're putting on the vials. They have specific vials for specific tests they're running on you. They know exactly how much each of those tests costs, and they can trace it back to a specific patient. For 8, lab tests by an outside contractor for a particular department, direct or indirect?
Direct.
Why is it direct?
If they know how much they're charging a particular patient, they can figure out how much like a particular department is incurring in those fees.
Because you know what patients are in what department. So you know what patient
Exactly.
labs to include in that department's assessment. So it is a direct cost. Correct.
I was thinking indirect for that. Because, like, if you get blood work done, wouldn't, like, multiple departments have access to that and they might use it?
So this is
But
inpatient.
doesn't
This is inpatient and you're in one specific department at a time. So
Oh, okay.
let's say that I am in general surgery and they do labs for me in general surgery, right? And they know the costs. They know all the patients in general surgery and all the labs for those particular patients. For that department, there's the labs for that day, the costs associated with it. But as soon as that patient moves to ICU, let's say, and they run labs there, then that patient's new labs that are run in that department are included with the patients in that department. So
Okay.
it's directly traced back to particular patients and the departments that those particular patients are in. So it
Okay.
is a direct cost for sure.
That makes sense.
Yeah, because you're not going to be in two different departments when your labs are ordered.
Right.
You'll always be in one department. Okay. We're going to go through the next set of practice problems after the break. We're going to take 10 minutes here, so come back by 1:52. Poorly designed building. So, okay, I want you to practice this next one. And it's a nonprofit, and we're looking at the Meals on Wheels program specifically for this nonprofit. So nonprofits have different programs, and you're looking at the Meals on Wheels program specifically, and then a particular senior that's served by Meals on Wheels. So when I copied it over from Word, it kind of got messed up, the formatting, and I couldn't fix it in the program. But you're looking at the Meals on Wheels program and deciding if it's a direct cost or an indirect cost. So you have two cost objects that you're looking at. And then you're looking at a particular senior and deciding if the cost is a direct cost or an indirect cost for that cost object. So go through this list. You're going to feel confident with direct and indirect costs after these two, and we'll move on. But I want you to practice this one before that. Okay. First cost, the leasing cost for the Meals on Wheels van or the Meals on Wheels program, direct or indirect?
direct.
Right.
Direct.
Direct. You don't have the Meals on Wheels program. You don't have any need to lease that van, right? For
Right.
a particular senior that you're servicing, is it direct or is it indirect?
Indirect.
Direct.
Indirect. So if I don't have the program, I'm not going to have this cost of leasing the Meals on Wheels van. But if I lose one of my customers or one of my seniors, I still have to lease the van, right? It has nothing to do with it.
Yeah.
So notice that in one instance, that cost is direct. In another instance, that cost is indirect.
Right.
Depending on that cost object. So that's the thing to remember, is that just because a cost is direct in one instance, it's not necessarily always going to be a direct cost.
I have a question. No,
Yeah.
just before we move on. But like by the same reasoning, you were like, oh well, if we lose one patient, we still got to lease that van. Well, by that same reasoning, couldn't it just be direct too? Like we're still leasing it either way. Shouldn't know. Like what's the rebuttal to that? You know?
You have the cost of that van monthly, right? You have to lease it. You're in a contract to lease it. So you sign that contract for a year term, let's say, and you have these set monthly payments that you have to make through that year, even if you don't have any customers or any patients to service. You're locked into the contract. So
Okay.
that's why it's direct.
Okay.
Or sorry,
I
that's
think
why
I'm
it's
tracking.
indirect for a particular.
So
Yeah.
even if like you lose a senior, you still have the van. I mean, if you lose all of your seniors, then you're going to go out of business. But
Yeah.
losing a senior, you still have the need for the van.
Correct. You still have your van cost, but it doesn't matter if you have 1 senior or you have 100 seniors or 1,000. For number 2, the cost of incidental supplies, so salt, pepper, napkins, etc., for the Meals on Wheels program.
Direct.
Direct for the Meals on Wheels program. What about for a particular senior?
Direct.
Saying indirect.
Why indirect?
Because like you don't know exactly how many napkins you give to each senior. There's no way.
Yeah, I was
Figure that out, right?
thinking the same thing. I put indirect.
It is indirect. You are correct, both of you. And I wanted some of you to say direct. I wanted some of you to say indirect because that one is one of those ones that would be a kind of both ways direction, but it's always going to be indirect because it's just not worth our time to figure out how many napkins I gave to this senior, how much salt and pepper I gave to them, and then on a per unit basis, what the cost. It's a few pennies per senior. So it's not worth our time.
That's fair.
Yeah.
I put direct because if you think about it, typically they're doing those packaged napkin, fork, knife, salt, pepper.
Still not going to be worth it to you because you're buying those things in bulk.
In bulk.
And figuring it out because sometimes maybe they had a friend there and they wanted to share their meal, so you threw in a couple extra, or you're not paying attention and you just throw in a handful of them instead of one, right? It's just not worth our time.
Yeah.
It's one of those things.
I went askew.
It's just not
When
worth
I read it as kind of like the whole meal prep, but it's not actually the meal prep. It's the accoutrement to the meal. So the salt and pepper, you wouldn't keep track of that. The meal, yes, but that's not what the question's asking.
Correct. And that's where in this class specifically, like in financial accounting, you can kind of brush over what was given to you. In this class, you have to read the specifics because the specifics and the details are what's going to tell you whether or not it's direct or indirect, whether or not it's a product or a period.
Yeah, so if we wanted it to be direct, we will be counting the amount of boxes of salt and pepper we bought. Each month, will that be part of it or not?
So for the Meals on Wheels program, that's why it's direct. Because for that Meals on Wheels program, you know how many boxes of salt you're buying, how many boxes of napkins, right? But for individual customers, you're still never going to get to that level of detail for these specific items. Okay, next one. Gasoline costs consumed by the Meals on Wheels van in relation to the Meals on Wheels program.
Direct.
Direct, right? You know how many miles and what costs they incurred for fuel for that program because you know what vans they have for the program. For a particular senior.
Indirect.
Indirect, correct. And that one's just going to be not worth your time because usually they're servicing a very small area geographically. So it's just not worth your time to figure out how many miles and then cost it out. 4, rent on the facility that houses Madison Senior Care Center, including the Meals on Wheels program. So is this a direct cost or an indirect cost for the Meals on Wheels program?
Indirect.
Indirect.
Indirect. It's a shared cost. It's an indirect cost. So you still have to pay the rent even if you get rid of this program because they also have the Madison Senior Care Center there. So it doesn't matter. It's not a direct cost. It's a shared cost. It's a common cost shared amongst those programs that they have.
I probably should have read the prompt to know what the Madison Senior Care Center was, but I was like, yeah, if it's rent, then that's probably direct.
That's why I have you guys practice these in class because you realize what is important in this class through these practice problems. And those opening paragraphs in this chapter, or in this class in particular, are extremely important. Financial accounting, you could get away with not reading what they gave you. In this class, you have to read every detail.
Okay.
So when we're talking about in relation to a particular senior, direct or indirect?
Indirect.
Indirect.
Direct.
Indirect.
For the salary of the part-time manager of the Meals on Wheels program,
Direct.
Direct.
direct for the Meals on Wheels program, and then
Indirect.
indirect. Yep. For the particular senior. That word salary means that he's getting paid regardless.
I'm noticing a trend with this activity.
Yes, notice that most of them are direct for the Meals on Wheels program and indirect for the particular senior. That's a good trend to notice. Depreciation on kitchen equipment used in the Meals on Wheels program.
Indirect.
Direct.
Direct for the Meals on Wheels program, because we have the kitchen equipment for the Meals on Wheels program. If we didn't have the program, we wouldn't have that cost, even though it's not a cash flow wise. And then for a particular senior,
Indirect.
indirect, yeah. Has nothing to do with the seniors that we service. For for number 7, hourly wages of the caregiver who drives the van and delivers the meals.
Direct.
Direct.
Direct for the Meals on Wheels program.
Indirect for the seniors.
Direct for the seniors.
What?
Okay, there's a huge difference.
Hourly and salary, or
Yep.
no?
Correct. Salaried employees get paid regardless of whether or not they work a full day or if they work a minute of that day or 15 hours of that day during busy season if you're in accounting, working in busy season, okay? You get a set salary monthly and that's what you get. For hourly employees, if you had 10 seniors that you were seeing every single day, right? And then 2 of those seniors went away. Would your employer keep you the same number of hours? If now
No.
you're servicing 8, no. So you can trace back that caregiver's time and cost back directly to a specific senior.
That makes
Because
sense.
if you have less seniors that they're servicing, we don't need their time as much, right? But if you have more seniors, then you have more time. So it is direct cost, those seniors.
I got a question.
Yes.
Like I totally track that if you have less customers, you're going to pay your employees for less amount of time. But I figured it was indirect because it takes a while for them to like update their hours, you know? It's not like a senior would drop and then they'd immediately reduce hours of their employees, you know?
Have you ever worked in a restaurant or retail?
I've worked in retail.
Okay. If you're slow and you have a full staff, right? What do they usually do? If somebody wants to go home early, they usually offer it, right?
Right.
Or
Okay.
even if they don't want to go home early, they sometimes say, hey, we don't need you because we got to cut costs somehow. So it does directly relate to the number of seniors.
Okay, that makes sense.
Yeah, Anthony, you're correct. Labor is a high cost, especially in California. Labor is extremely high cost. And for a nonprofit, if they're not doing anything, you're not going to have them sitting around. And if he's a vehicle driver and he's going just to specific customers, then it really will cut down his hours and his wages.
I'm spoiled to have like day rates or hourly minimums, so I think that's what confused me.
And that's where you're kind of a hybrid between like an hourly employee and a salaried employee, right?
Right.
For number 8, costs of complying with health and safety regulations, direct cost
Indirect.
or
I
indirect?
put indirect.
Direct.
Correct. You're not going to have any health and safety regulations if you don't have this program. If you have this program, you have to comply with health and safety regulations. The health department comes in, checks to make sure that you're doing everything you're supposed to. Chefs are wearing their covers, etc. Right? For a particular senior, can I trace that cost back?
Indirect.
Yeah, it's indirect. For the last one, cost of mailing letters, soliciting donations for the Meals on Wheels program, direct or indirect?
Direct.
Direct. If I didn't have, I'm literally have this program that I'm trying to get donations for to support this program. So the cost of mailings is going to directly trace back to this program. And for my individual seniors, it has nothing to do with them. So it's indirect. I'm not soliciting. I'm not soliciting the seniors for donations. I'm soliciting the general public in that area for donations.
Oh.
How do you know that donations aren't for the nonprofit as a whole and not just the Meals on Wheels part of it?
I am implying because, good question. I should have included that it was specifically for the Meals on Wheels. It is specifically for the Meals on Wheels program, but that's a good question.
Professor, I have question number 4 again, like which kind of facility does the house medicine?
So
Which kind of facility? Yeah.
So rent on the facility. So it's a building. It's a shared building with the senior center as well as the Meals on Wheels program.
Right.
That's why. If you only had the Meals on Wheels program from that facility, then it would be considered a direct cost of Meals on Wheels. But because it's a shared facility with that other program, it's considered an indirect cost. That's why.
So it's a sharing program.
Yeah, it's the sharing component. For direct and indirect costs for things like that, I like to think of it in the reverse. If I was to get rid of this program, would I incur this cost still? And if I would incur this cost still as a company overall, then it's an indirect cost of that specific cost object. So if you notice for all of these indirect costs over here, if I got rid of a particular senior, I'm still incurring the lease for that van. I'm still incurring the rent on the facility. I'm still incurring gas costs, right? So that's why they're indirect.
Thank you.
Does it make a little bit more sense now after the second question?
Yeah.
Definitely.
We'll definitely be going over direct and indirect costs in several chapters, so you'll get more and more confident in it. And I think that as we move on, you'll see and understand a little bit better, especially as we're applying it to direct materials, direct labor versus indirect. Okay. We're gonna move on. I really like product and period costs, so I'm excited for this next part. We use this in so many chapters, that's why I like it. So, and I think the reason why I like product and period costs is it brings back a little bit of financial accounting. So product and period costs are used for external financial reporting purposes. So GAAP is dictating how we determine whether or not a cost is a period cost or a product cost. So everything that you've learned to date in financial accounting still applies. We're just going to call it something new. So for external reporting purposes, depending on how we classify it, if it's classified as a product cost or a period cost, that means that we're either going to be expensing it as incurred, or we're going to be inventorying those costs and attaching it to units of product and then expensing it upon sale. So this has a huge impact on the company's bottom line. So classification is extremely important. And when we're classifying as product or period costs, we're looking at not just the fact that it's a cost, but what does the cost relate to? So product costs are inventoriable costs. These are costs that are only expensed upon sale of the items. And the definition of a product cost differs between manufacturers and merchandisers because different costs are associated based on their company and how they operate. Manufacturers for product costs are costs manufacturers incur to produce their products. So all of their production costs, all costs associated with manufacturing their products and converting those goods from raw materials to finished goods are considered product costs. So all of the costs of manufacturing, including direct materials, direct labor, and manufacturing overhead. So manufacturers have 3 product costs: direct materials, direct labor, and manufacturing overhead. And we'll get into the definitions of each of those soon. Merchandisers purchase the goods from a supplier or from the manufacturer and then sell the goods, right? So the costs merchandisers incur to purchase the goods to be sold. So freight in, the shipping costs to bring those goods to my facility is included as part of the cost of the inventory. Taxes that are incurred for purchasing those inventory items is part of the cost of inventory. It's a product cost. Tariffs, all of those costs that you learned in chapter 6 in the inventory chapter in financial accounting are all considered product costs. These types of costs are considered inventoriable costs because these costs are associated with individual units of product. They attach to units of product and sit as assets on the balance sheet until sold. So I could incur a lot of costs and never sell those units, right? And never expense those units. So on a cash basis, it would look a lot different than it would look on an accrual basis. On an accrual basis, I'm not showing the expense. On a cash basis, I would be showing the expense for those costs that I'm incurring. These costs are associated with units of product. They're inventoried and sit on that as an asset until they're sold. When they're sold is when we expense them, not before. So you may incur a product cost in one period, 2019 or 2018, you could have incurred that cost, but you may not expense it until 2020 or 2021, years later. Period costs are completely different. These are your normal operating costs, right? So product costs, you have your sales revenue, then you expense product costs, matching that cost with the revenue that was generated, and then you calculate your gross profit. Period costs are everything that's below gross profit. Your admin team, CFO salaries, CEO salaries, internal audit, any auditing fees, any accounting staff related, your marketing staff. So selling and administrative costs, the costs of operating the business outside of the manufacturing realm. Everything outside of the manufacturing, the production, or the acquiring of inventory is considered a period cost, and these costs are expensed as incurred. So normal financial accounting rules go. I used my facility, rent expense. So selling and admin, rent expense. But if I used the facility for the factory, the rent expense is actually a manufacturing cost. And it's an inventoried cost. It would be considered manufacturing overhead. But any cost related to selling the products, the finished goods warehouse, the marketing salaries, the marketing team's costs, advertising, anything related to administrative costs, running the normal business, the day-to-day operations, these are all considered period costs and are expensed as operating expenses as incurred. So the period that I incur these costs is the period I expense them. You expense them once they're gone. They don't sit on the balance sheet like product costs. Give you guys a second to digest that.
Yeah, I need to just take it all in, I need to just realize what just happened.
I just took everything you learned in financial accounting and threw it up in the air. But it's still relevant, promise. The point with this particular part is you really want to focus on what department or who incurred these costs. What does it relate to? Does it relate to manufacturing? If it doesn't relate to manufacturing, then it's automatically a period cost. If it relates to manufacturing, then we'll get into more detail. It's always going to be a product cost if it relates to manufacturing.
So are product costs and period costs almost like direct and indirect, where like if it's directly correlated to manufacturing, it's a product cost. If it's not directly correlated to like the factory and manufacturing, it's then technically a period cost?
Yes, you can think of it that way.
Okay.
But there will be direct costs and indirect costs, but yeah, that's how you explained it is fine.
Okay.
Okay, we're gonna go down and kind of expand upon product costs, but specifically for a manufacturer. So manufacturers are manufacturing products, right? They're creating products. And their product costs are very specific. And product costs for manufacturer are related to activities and processes that convert raw materials to finished goods. So the manufacturing realm of things. Wait 1 second. Bella, go talk to daddy. So I like to use this example for manufacturing companies because I think everybody can understand a t-shirt or production of a t-shirt. It's pretty simplistic, right? So when you're thinking of a manufacturer, they're focused on those finished goods because this is what they can sell to the consumer.
I love the t-shirt, by the way.
Thanks. Okay, so this is what they sell, right? This is their end unit. They don't have a sellable good. They don't have anything. For manufacturers, there's 3 inputs for manufacturers, 3 specific types of costs that go into producing each unit of output, each unit of finished good. The first is direct materials. So direct materials are materials that become an integral part of the product that can easily and conveniently be traced directly to it. If I'm thinking about a t-shirt, I know how many yards of fabric are in each unit that I'm producing, right? I'm manufacturing t-shirts, I know how many yards are in it, and I know the cost associated with it, and I can directly trace back that cost, and that's why it's a solid line. I can directly trace back the cost of that fabric to specific units of product. It's a direct material. So direct materials are tangible, they're materials, they're the big component pieces that are being used to produce those goods to their final end product, the finished good. Those manufacturers of t-shirts have these yards of fabric, right? And until they put it and create those t-shirts, they don't have a good that they can sell. It's considered a raw material. The thing that you have to understand about manufacturing costs is there is no direct material account. There is no direct labor account. There is a manufacturing overhead. We'll get there later. But you don't have specific accounts for these. Direct materials, when you purchase those yards of fabric, are going into my raw materials account. And in that raw materials account, I may have direct materials and indirect materials, but they're all related to the manufacturing of those t-shirts. But when I go to produce those goods, I know that if I'm requesting yards of fabric for those goods, I know exactly how many are going to be used for each of those t-shirts that I produce. It's easily and conveniently traced. If I'm talking about t-shirts, there's really nothing else that would be a direct material for t-shirts. Maybe the tags, maybe, but probably not. All the other material that you would think about that goes into a t-shirt production, the thread, any dyes that are used, any applications that you're putting onto the t-shirt are going to fall into manufacturing overhead because it's not worth it to figure out the real cost of it, of the amount of thread that you're using per t-shirt, right? Direct labor is the second component. It's also a direct cost, and it's the labor aspect, and it's the costs of the individuals physically putting those goods together, physically manufacturing those goods. So in a manufacturing facility now, the individuals that are putting goods together are like using a barcoding system where they barcode their employee ID, they barcode the job that they're working on, and they know when they're starting on it, they know when they finish, they know when they take breaks, and we know how much their fringe benefits are, and we know what their hourly wage is. And we can break it down and show this number of hours were worked by this employee to produce this unit of good. So it can easily be identified back to specific units of product. And it's the labor related to producing those goods. Direct labor costs are not going to be salary expense. They're not going to be wage expense. These are not going to be expense in the normal definition that you're used to. They're going to be part of our cost of goods sold once those units are actually sold. So we're accumulating those direct labor costs and the direct material costs in work in process as we're manufacturing them. Manufacturing overhead is the catch-all for everything else. Anything related to manufacturing that does not classify as direct materials or direct labor is considered manufacturing overhead. It's an allocated cost. It is not directly traced back because these are indirect costs of manufacturing these goods. Manufacturing overhead includes indirect materials. So these could be materials that we used in the factory, towels, tissues, toilet paper, cleaning supplies, right? These are all considered indirect materials because it related to being used. It was in the factory. It was in the manufacturing facility. And then those materials that are just not worth our time or not easy to conveniently trace back to specific units of product. Indirect labor is all employees that work in the manufacturing facility, their time, their hours, their wages, but they are not physically putting the goods together. So the janitorial staff, the security staff at the factory, the supervisor staff, the testers of those products, right? The quality control individuals. Those are all important. They're all related to manufacturing, but they're not putting those goods together. They're not converting those goods from raw materials to finished goods. So it's considered manufacturing overhead. It's indirect labor. And then anything that's not tangible is manufacturing other. So utility costs in the factory, direct labor, depreciation of factory equipment, etc. Do you guys want to practice one and then be gone for the day?
Yeah.
Okay. Questions before I move it up? All of these are product costs. They're just specifically manufacturing costs, related to manufacturers only. Okay. I'm going to pause it here. Okay, for number 2, rent on equipment used in the factory. So the first kind of keyword that you see there is what?
Equipment.
Close.
Rent.
Used.
Factory. See, it's okay. It's totally fine. That's what I was hoping to hear, all these different answers, because it shows how solid you are in financial accounting. So, totally fine and normal. Okay, so since it's related to the factory, by default, is it a product or a period cost?
Product cost.
Product cost. Boom. We already know it's a product cost. Now, since it's related to the factory, now I need to go a step further. What's the cost? What is the cost? Is it a direct material cost, direct labor cost, or is it manufacturing overhead?
Manufacturing.
Manufacturing overhead. So it's going to be technically manufacturing overhead other, because rent is not tangible. It's not an indirect material. It's not a material at all. It's not labor related, so it's not indirect labor. So it's manufacturing overhead other. For number 3, lubricants, so oils used for maintenance of machines.
Product.
So maintenance of machines is
Yeah,
implying,
product cost.
yeah, it's implying that it's happening in the factory, right? You're
Mm.
using the lubricants for those machines. The product cost, and what type of a product cost is it?
Manufacturing overhead.
Manufacturing overhead, and it's not other because other is intangible. It's not physical. It's indirect material.
Okay.
So honestly, after we go through indirect material, indirect labor, and manufacturing overhead other, do you need to identify it ever again? Probably not. Once you know what classifies as those, because you need to know that it classifies as manufacturing overhead. That's the most important part of it. Salaries of finished goods warehouse personnel. What's the key word here?
Period.
Warehouse personnel.
Salary.
Finished
Salary.
goods.
Salaries.
Typically, it's finished goods warehouse. Salaries is secondary to that. What's the whole purpose of having a finished goods warehouse? To hold products that are ready to be
Sold.
sold. So, is this part of the manufacturing of these products? Or is it outside of that
Yes.
realm?
It's outside since they've
It's
already
outside.
manufactured.
It's outside. You've already
It's
manufactured.
outside.
Yeah, it's already finished, so it's outside
You've already
that realm.
finished these. You've already moved these from work in process to finished goods. These are part of the selling team. This is the selling. It's a period cost. And since it's a period cost, we're going to care about the fact that it's salaries expense.
Professor Wade.
Yes.
So when I was reading it, I was kind of looking at the fact that it was talking about warehouse personnel, and it didn't say specifically like the people making it. Like, what if it could have been like the supervisor of the warehouse or someone associated with it but isn't making it? And so that's why I did period instead of product.
For number 4, or which one? Sorry.
Yes, for number 4.
For number 4, because it's the finished goods warehouse, even if it's rent of the warehouse, if it's wages, not salary, it's still going to be considered a period cost because it relates to the finished goods warehouse. And finished goods, that means that the products are done being manufactured and it's just waiting to be sold. And there was a question in the chat from Alex. Do we have to specify indirect or other, or leave it as MOH? So in this particular question, I want you to specify it because I want you to get used to indirect materials, indirect labor, and manufacturing overhead other, because I want you to know the types of costs that are associated with it. But in general, those 3 are always classified as manufacturing overhead. It's just a specific type of manufacturing overhead. It's now 2:50, so I'm gonna leave you be for right now.